Hey everyone, welcome to What's Happening in Real Estate This Week with Conrad Zurini with REMAX, Escarpment REMAX Niagara, broker owner of one of the largest REMAX offices in Ontario, probably in the world. And
Probably second in the world.
second in the world, and Mission 35 Mortgages, big mortgage company, better than the banks. Everybody sees the billboards. It says interest rates better than the banks. So anyway, guys, a little push there. Anyway, guys, my name is Rob Golfi with REMAX, REMAX, the Golfi team, REMAX Escarpment, the Golfi team. And we got some things I want to talk about today is retirees are moving in together, living like the Golden Girls. Is that happening? Like, are they like do people in their 70s have mortgages? First of all, and second, are they getting mortgages together and are they moving in together? So what's happening with that?
I haven't seen them actually get mortgages together, but people in their 70s have a tremendous amount of wealth in their home. The number one mortgage product, which is growing tenfold, is the reverse mortgage, right?
Wow.
So these people are taking out reverse mortgages in order to stay in their homes because pensions are low. CPP and OAS is terrible with inflation. Like you can't even go to the keg for dinner on that right now, you know? So
yeah, but an immigrant can go to the keg because they get way more money than a retiree. They could go to the keg once a week.
Yes, that's different.
Well, no, I think there is, but there are, and Brian can speak to it better than I do. But we are, when we're talking to people out there, they have these people have some mortgages that they've lent even to their kids to buy houses.
Yes.
So they are there, and I will say this: I'm kind of in the building trade a little bit, built apartments. There have been seminars where and people are talking about two principal bedrooms and with en suites, okay, and redesigning how we build it. So not just one big room, but two rooms of equal size. And yeah, people are coming together. And we saw it in the rental space that we have, that it is we're seeing multi-generational coming together, and you'll see it in 3 bedrooms, and you're seeing it in Toronto as well. It's cheaper to get a 2-bedroom, okay, for 2 people to share a 2-bedroom than it is for one person to get a 1-bedroom, right? So it's economics. It's even the space. Like, do I want to be in a walk-in closet, or do I want to have a bit of a living space and a bit of a kitchen, maybe 50% of the time, rather than working out of a linen closet 100% of the time? So yeah, there's a shift. They're talking to builders. There's these spatial people. We're going to redesigning space and all that kind of stuff. So you'll see that coming.
So would they be building 2 bedrooms with en suites in each bedroom plus a powder room for guests?
Yes.
Wow.
Yeah.
And condos, apartment. What about
condos and apartments? Yeah, we're going to see it. We're going to. They're talking about it, apartments for sure, and condos, and for sale condos.
Do you think that'll replace the in-law? Do you think you'll still see the in-law when it comes into like single family homes if they do that type of thing?
Well, I think that whole multi-generational and the in-laws is going to be still on the rise, and people, we're seeing people, like, it's interesting because people are living longer. This is another thing we're seeing. They're taking them out of a home because, mom is, she's 93. She only has enough money to get to 96.
Yeah.
And they're concerned that, she's pretty healthy. So, she's going to run out of money, and they're bringing them home. And yeah, you're going to see all that because look, it's Pig in the Python, that whole boom, bust, and echo. Well, that boom, baby boomers, right? They're going to be needing space, needing care, and we won't have the facilities to do it, or people won't have the money to carry them through. So yeah, you're going to see this generational thing on the rise for sure.
Well, especially there's a lot of widows and a lot of divorced women that are just, you know what I mean, that like all by themselves. And I'm sure, the great thing about that is they've got company. They got somebody to look after them in case like something happens, they fall, somebody, they got a friend that they can help them out in different things, and they're not going to be lonely. But so this is becoming big now, like apparently.
Yep.
Wow.
And it's cheaper too to take out a little bit of money. What we see a lot of people take out maybe $100,000 when they have $600,000 or $800,000 equity. that allows them to bring in the PSW, like the personal support worker. It allows them to bring in the services, maybe allows them to move the laundry, the washer dryer to the main floor instead of on the basement. So they stay in their house. You know, they're not upset. They're not moving. They're staying where they are.
But okay, so somebody gets a chip mortgage for $100,000. They got 600,000, let's say, paid off house. They take a $100,000 chip mortgage. They run out of that. Can they go? Do they just go back to the chip mortgage and just?
Yes, they can go back to the potato chip. Yeah, you can
No
only
kidding.
go up to 50% loan to value, but it's dependent upon age, right? So the older you are, the closer you'll get to the 50% loan to value. If you're going to like technically you can go there at 55, but because your life expectancy is so much longer, you're not getting much. You might get maybe 10%.
No kidding. So unless you have bad health, do they ask when they go for the chip mortgage? Do they say, "Can we have your medical?"
No, but
I don't know their underwriting policy on terminal illnesses, unfortunately.
But they take out insurance policies on people.
That's it. Oh my God. But they take insurance or say, well, we know you're not going to live, like, even though you're 55 years old. But it looks like you may have only 5 years life expectancy, so we'll give you 50%. So.
I'll tell you, they're adding staff and lenders all the time. I wonder if they reverse underwrite and say, "Oh, you smoke? We'll give you a little bit more." You know?
Tell us your health situation.
Yeah. Huge market, like it's growing and it's become legit now, right? You know what I mean? So, look, and it's kind of cool to retire poor, because look at Bill Gates. He just announced today, 99% of his estate will go to charity. He said, when I die, I don't want anybody to say Bill Gates died a rich man. That's what he said today. So there you go. So now it's okay.
I think I'd still take 1% of his wealth, though. 1% probably pretty good of Bill Gates' money.
You know what? They're full of crap. 99%. Believe me. 99% maybe in one bank account. I don't know, or 99% of his stock portfolio.
Just on one account.
Yeah, he's only like, believe me, they're not going to.
A private jet and 2 private jets, probably in a yacht. So
no kidding. So another thing that's come up on here is that parents are gifting their kids money. The kid, like let's say they're buying a $700,000 house. Parents give them $100,000. They put it down. The kid has a partner that moves in, live there for 2 years. And now the partner says, "Hey, I want half of the equity and everything that you have in there." Like, are kids signing cohabitant agreements with their partners? Or are they that in love that they think it's going to be forever?
You know, I talk to the lawyers all the time about it. It's funny. You'd be very surprised. Maybe like 50% actually do some sort of cohabitational agreement, some sort of trust agreement in behind, because again, you don't want your parents to get stuck with capital gains and all that kind of thing. So they've got it all there, and the kids are 50% say, "Nah, that's okay. We're fine with it." Well, then at the end,
what about the parents? But the parents giving the money, I'm sure I hope they're smart enough to say.
I think the solution that we see really good is put the parents on title.
Yeah.
For a couple of reasons. Because number one, these gift letters, there's a lot of confusion in it, because what happens is, if I give my daughter a gift, I have to sign a letter to the lender that says,
it's a gift.
It's a gift. And in that letter, it specifically says does not have to repay. So now if you have 2 conflicting documents that say, "Oh, why did you sign this thing? It doesn't have to be repaid." And now you have a trust agreement.
Oh,
you're in a real slippery slope. But if you put 100%. Mom and dad on title, hey, I can verify the down payment as a banker, say it's coming from mom and dad. You can register mom and dad as a 20% owner, right?
Yep.
Right.
Totally legit. The gift is very, very slippery for that now.
Okay. A couple of reasons. Can that, if they put mom and dad on title with the child, can that hurt them buying, let's say, a cottage down the road? It can. It can hurt them.
Now you've got affordability issues, because now mom and dad, right?
Car loans. What about car loans and everything else like that? Yeah.
So mortgages are there. Your mortgages are there, man. Right? They're on your credit bureau. So
Okay. Here's another thing. Okay.
They're still responsible.
I'm giving ideas to the public. I'm here to help the public. I'm here. So, okay. The parents give the money as a gift letter to the kids.
Mhm.
Closing date comes, everything's all set. The parents say, listen, we want to register a mortgage against this house. Can the bank say, no, you can't do that? They don't know about it, but can they go look into the title and see? They don't look at the title.
I think that does happen, right? Like, I think that does happen. And I could see parents doing that based on, being concerned about things. But you have to be careful, right? Because like if you get a mortgage with a major bank, one of the rules and conditions is no secondary financing. So now does the bank go and look at every single mortgage?
No.
But if for whatever reason, like I had a situation once where I saw where someone did a mortgage on a property and they were tearing it down to rebuild. Complete no, right? They say, listen, I'm going to mortgage this crappy house, tear it down and rebuild. Okay. You're not supposed to do that. You're supposed to disclose because the bank says if you tear down the security, they can call the loan. Well, guess what happened? Just some fluke, some branch manager saw the address, happened to be right by his house, and saw that the house was missing, and they called the loan. Guys didn't have. So, in these cases, then can a bank always pull a purview, see that there's a second mortgage? It's a risk that somebody takes that can jeopardize the loan.
And look, commercially, they do, because I get billed for every commercial mortgage once a year for them to pull it. Yeah. So if they start to see some of these, we're seeing these power sales where they're, holy shit, like what's going on? I got one of the 5 majors and I got a second there. They might decide one day to say, hey, listen, one of the conditions of the mortgage is every year you have to pay, $110 for us to search title to find out that there's no secondary mortgage. So that might come. Right?
You know what, Conrad, you're right. I wouldn't be surprised if the banks get a program to check it automatically, right? Like the technology is there. They pull a purview and say, hey, you registered a second. It's against your commitment. What are you going to do? Get rid of it. So,
and they want their money back now. It's funny. They want their money back.
No
and
kidding.
They want to make it and redeploy it where they can make more money, right? That's the idea now, right? So,
wow. You know what? It's insane, but and like there's a lot of people, and I know one couple, elderly couple, they gave money years and years ago to the son to buy a house. They were getting married, and then 5 years later they separate. And guess what? And the parents were kind of upset because the wife ended up getting half, not like half of what the deposit was too, with the equity, and it didn't seem fair on that end of it. So if you're loaning money to your kids or giving the money to the kids, and you want to protect it so they keep it and take it to the next house or keep it down the road.
Another solution too is how you register the title, right? Because most people register as joint tenancy where it's 50-50.
Yeah.
There's no reason why I can't if my parents gave me a gift and I'm marrying some questionable person, you can register it as 80-20. I can say, okay, listen, I'm going to register the property 80% me, 20% you.
So you know what I heard?
There's capital gains, right? The capital gains piece, right?
So can one partner add somebody on title as joint tenancy or tenant? Can they do that?
Like if
so like
you need consent. You would have to have consent from both parties. It's kind of like a bank account. Like if me and Conrad have a bank account, I can't just add Rob to the bank account without Conrad's consent.
Same thing. Yeah.
So I sold a house one time. The wife passed away. And then he finds out after the wife passes away, the wife put her kid, this is a second marriage, her kids on title as tenancy. Is it tenancy in common?
It is tenancy in common.
Yeah.
So can that happen without him knowing?
No, but they must have had it in tenants. They must have registered tenants in common originally, because we've just had one like that, and actually it was tenants in common, and the kids, the owner thought it was the other way around, and it was actually, they were married. It weren't even like a second marriage. It was like a full on marriage. So the kids got the money. The husband wanted the kids to get 50%. And they were
Right.
both their kids. So at the end, we had to go back and almost resell it again because we didn't have the authority at the time to sell it because the
The
kids
kids were on
were,
title.
yeah, like
So
just like that.
So this guy, I'll tell you, this guy, either he forgot that his second wife's kids were on
Well,
title.
yeah, well, they probably did it that way at the lawyer's office. They agreed at the time, and they decided to go tenants in common, so that she would have that ability. But he probably just thought
He probably
joint
forgot.
Well,
he thought it was joint tenancy. But you can find it out, and I tell you something, Rob, you got to tell your team this too. You can pull the abstract. You can find
Yeah,
it.
yeah.
And I'd pull it just to make sure because it is a messy situation later on, and it can delay closing for a very long time.
Yeah. Well, this guy, I'll tell you, he was pissed. And when he found out when his stepkids were on title, he said, if she was alive, I would kill her now for sure. She died, right? So he was, and like he couldn't believe it. So I had to deal with his stepkids in selling this house, and he had no idea that his stepkids were going to get half the house. And I don't know what the financial situation, whose money it was, and all that kind of stuff. But she protected her side of the family to make sure
the
kids.
Sense at the time he wasn't paying attention.
Yeah.
What I get it confused. Tenants in common, joint tenancy. I
know.
all the time, right?
Like, I gotta have a cheat sheet in front of me all the time.
Yeah,
I know.
If you were a lay person, you wouldn't even know anything. What does that even mean? God bless us all. Like you sign the deal and it's done.
Yeah, that's it. So guys, we got winning any market coming up, and you're speaking, Brian.
Yeah.
I'm looking forward to that. It's next week on May 14th at the Leona Station. Show up. I'm going to tell you something. We're going to talk some stuff. We got Bill Pipes coming from the U.S. speaking, and I'm going to talk up there just at the beginning. I'm going to show you guys how it can change your life. This business is the best business in the world, and people don't know it. The timing, if you have your license right now, it's going to you're going to find things that are going to happen for you guys. What I'm going to show everybody how they can make an extra $100,000. So, guys, anything else happening? Anything?
Well, I'm next call. I'm going to be in Sao Paulo, Brazil. So I'll be next Thursday.
Oh, wow.
I'm a keynote speaker at a convention there. I think they get about probably 5,000-6,000. I'm probably one of my biggest audiences in my life. So
nice. You got to do a selfie. You got to do a selfie with everybody behind you.
I'll send it off. Yeah.
Send it off. You got to do that. Awesome.
So.
All right, guys. Well, listen, thanks for being on. And if you want to listen to more, go to YouTube and you can check out what's happening in real estate this week. And everybody have a great weekend.